And we should be off and going. Oh, be sure and cover your mouth there. Every Friday is a good Friday for me. My disclaimer: is anybody knows out here, the examples provided for educational purposes only. They are not to be construed as financial advice or recommendations. You should examine your own circumstances, and trading involves the risk of loss of capital. A little bit about me, if you don't know, I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business. I've been an active trader since 1998, a full-time trader since 2009. And technical trader, but I use some limited fundamentals, and we'll talk a little bit about that as we go along. Stick around to the end of the presentation. I'll give you if you've never been a member of Hit and Run Candlesticks or Right Way Options, you'll have a little special offer at the end. I didn't think you should miss it. The agenda here, I'm going to repeat what I did a few weeks ago here on managing risk in volatile markets, but it's a little bit different. I'm just going to quickly skim over the slides in that managing risk area. However, I have posted in the file folder the copy of tonight's slides and a copy of the earnings economic calendar. I flew F4s, F5 aggressors, Top Gun for the Air Force, and F-111s. That's where I got my combat time in Desert Storm. All right, I'm going to quickly here managing risk. The number one thing we need to be concerned about right now in the volatile markets is preservation of capital. Live to trade and fight another day. When in doubt, don't. That's at the bottom of the slide there, but we're in extraordinary times. We can't continue to do stuff the way we normally did them. We need to take a macro view of the world, and I'm going to help you with that a little bit, I believe, here. And we should expect the ripples in this bathtub or pool are going to take some time to dampen out. Know about the economic reports that are coming up or any significant events that are going to have an impact or could have an impact on the markets. That's where I add fundamentals. I was a little bit surprised last Friday, not this coming Friday, this last Friday, but Friday before last, that the jump to 3 million jobs and 6 million didn't really kill the markets. I guess a lot of that had been kind of factored in, which is not bad. Job reports, all reports, the report that we got tonight that was unexpected, that they pushed back the meeting between Saudi Arabia and Russia till Thursday, so that's going to take, oil's going to take another hit again tonight, around 10%. Adapt to the situation. Trade smaller, shorter time frames. Take profits more quickly. Be patient. Don't anticipate the setup. You should always do that, but even more important to do that now. Be prepared to sit on your hands, and before swing trading. And I'm not swing trading. I have held a couple of stocks overnight, which is, according to Doug, a very gutsy move. But I like the setups and I like the momentum. But I sold at the open the following day. So, it's still take your profits when they come, because they could disappear in a heartbeat. Before I forget, one thing that happens in bear markets is that we tend to open higher and close lower. And here lately we have been opening higher and closing lower, or opening lower and closing higher, with a lot of volatility in between. So just because we're looking to open 200 points higher tonight doesn't mean, in the Dow it's almost 300 now, that doesn't mean anything. We've got a long way to go before the open, and it isn't even longer to the close. How to recognize the bottom. This is all new. Rule number 1. I'm knocking on wood here. Do not try to predict the bottom. Be patient. Let the bottom come and prove itself. Make the chart show us that they've defined support. You got to have a higher high followed by a higher low. Then the trend is basically being established. Excuse me. Excuse me. No, I've just got some allergies here. Considering entering on a bullish candlestick pattern, you've got to do that. And I say consider. Just because I get something that looks like a bottoming pattern and it's a bullish candlestick does not mean I have to get in. I can sit back. I can choose to be more patient. Be aware of overhead congestion levels that could act as resistance. That could be another reason why I would not necessarily go long, even though I get a bullish pattern setting up, but I go back over to the left and I find there's too much resistance overhead. Excuse me. See if I wet my whistle, if that helps at all. And if you do get long and the pattern starts to fail, exit stage right very quickly. Better to be out early than late. You can always get back in. I'm showing you the little J-hook zigzag pattern. It works on any time frame. Results in a tight stop, well-defined stop, and you can see where I've got marked over here. You see where I've got the two possible entry points, and there's the stop point. If you entered in this little area right in here, your stop would be a lot closer than if you waited for the breakout. The other thing is, if it gets up to this level and then curls down, well, you can take the profit, and what I normally do is I go long here, and my first target is the prior swing level. And as soon as I get any sign of weakness at or near that level, I take off half. Or a third, but really half. So get 1/2 there. Then if it rolls down back and takes out my stop, I can be much more, I could give it a lot more room on my stop, because I could go all the way back to the entry point and still have a winning trade. It would have to go down the distance between these two to the other side for me to have a losing trade. And I'm not going to allow that to happen. That's just to get to a break even. So what I like to do is take it down that one and then trail it, and I use the trailing stops. Hi, David. Great. Steve, just to confirm, you don't wait for price to hit your stop if you see it going south. No. Well, it all depends on where you're entering the trade. All right, let me kind of clarify that. All right, if I entered at this level in here and the stock starts going up and it gets to a resistance level and I've taken my money, my stop is going to be down here where all the red dots are. Do I have to let it go all the way down to the rising stop, or let's just say, let's go back to the entry. Let me say it even better. Val, you can Ed, could you help her on or him on getting the charts to a larger size volatility stop? Hold on. Okay. Let's say I got in here and it goes up a couple of ticks and then starts to roll over immediately. I have a stop down here, but if the overall markets are starting to look ugly and I don't feel comfortable with it, I don't necessarily have to ride all the way down to this stop level. It's my choice. This is an initial stop, but once I get it going in my direction, 1 or 2 candles, if it then does a reversal back down, I'm starting to raise my stop already with a trailing stop. So my point was, and maybe I didn't say it very succinctly, is that when I enter the trade and it starts to go in my favor and then starts to go south, I'll probably exit. I'll probably take at least partial profits so that I can give it a little more room and have to let it go down to maybe the initial entry point. So really, shoot first and take names later, I guess. Yeah, you're right, Kimberly. About 15 minutes later, or so, some number. If you're trading a 15-minute chart or a 5-minute chart and it goes up by 3 candles and then it starts to roll over, you have to identify, is the rollover happening at a minor or major resistance level? Have the markets just reacted to some news that came out that is, causing it to be negative? Everything has to be reevaluated at the time. To be honest with you, really. All right. Here's one that like I said, on any time frame. Here's a 30-minute time frame for UAA, Under Armour. Now, if you look at the daily, it's not really a great chart to be thinking about long. It's a contrarian trade. But you can see here where I drew, get my crayons here. I drew the trend line, and it broke up through the trend line and rallied, probably 50 to 75 cents or so. It's not a great amount in there, but again, this is an example, not necessarily the greatest example, but once it gets in here and it establishes some sort of bottom, it did pause right here just under that trend line, and then it broke through it. And you would have to decide here whether to take partial profits or let it ride. Now, one thing I like to use, and everyone knows this if they've listened to me at all, I use this Stochastics RSI 7733. And when I get a substantial break down below that, it tells me that momentum is waning. It doesn't tell me I have to sell. When stochastics curling up from the bottom, does not tell me it's a buy. But it tells me that momentum is picking up to the upside, which it did right here. And momentum is waning right here, but it's going sideways and it hasn't broken down. So I use that as an aid. I use moving averages as an aid to visualize the trend. Could we have kind of paused here at this 8 1/4 level because of a couple of things that have happened out there? One of them, we got to this $8.25 level. I would have expected a pause right there, at least to run into some sellers. It hasn't pulled back quite a lot, so you could still be long. Could you use that as target number 1? Sure, I probably would have. So I'd be out half already from an entry point here around 775 to 825. I'm up 50 cents, out 200, 400 shares, whatever it is. Let the rest ride here and try to use the stop at $8. Give it some room because it has to go all the way down to 50 cents below where I bought it. At 75 would be 7 1/4. It had to go all the way down to here before I'd have a losing trade. I wouldn't do that. I'm going to have $8 or just under that, maybe $7.95 or something like $7.93 as a stop. Depends on the volatility and what I'm looking at, what the markets are doing. But the possibility is that it's doing an up move. It's doing a pause here or slight consolidation, ready for the next move up. And if it does that, I've got half in. If it goes the other way and goes down, I've already got a little bit of money in the bank. take a look up at 8:10 p.m. S full. Use the magnifying glass or double click on the chart. Let's continue. I've got it up as I can't control the size. Double bottom or a W pattern. This we talked about a couple of 3 weeks ago. Works again on any time frame. Notice there is no time frame here. And basically you got the double bottom, the W. This could also be considered a W with a cup and handle with a dent in the bottom of the cup. And you can, two areas of buy. One would be on the initial breakout. Another is after a successful retest or proof of that it's going to hold, say down here around 4 1/4, and then to get in there and then start riding your stops up. Then I'd want to be looking at something over here to the left to try to find out whether or not there was any resistance over there to maybe take a quarter off the table. Now we've got an example here. I believe it was LB, maybe it wasn't. Yeah, Limited Brands. This is pretty much a double bottom. I would not have brought, there is no initial breakout other than the breakout here. It wasn't on the double bottom. It did a retracement that in my mind is a little bit deeper than I would have preferred, but it is a retest of the lows. One thing that's negative to me is the balance of power. The volume here on the bottom was not a blowout. It was less, so it did basically a successful retest. Could one go long here with a, around, it could have done it around 11 1/4 or so on Friday with a first target of $14.50, another target way up here near $17 to $20. Yes. And curling up from the bottom potentially for stochastics RSI. So is this a contrarian trade? Yes. Has it broken the downtrend yet? Not exactly. Because what I'm going to show is that's pretty much the downtrend. But it's close to breaking it. Could you have got in on Friday or could you wait for confirmation? The only problem with waiting for confirmation is the initial stop needs to be a little bit lower. Can I explain the balance of power? Actually, the best thing for you to do is to Google Worden Brothers, WORDEN Brothers, balance of power. They'll do a better job of explaining than I ever could. And I use it as a tertiary indicator, so it's definitely not even on the top of my list. Just gives me an indication whether there's a negative sentiment, positive sentiment, or neutral, and it's pretty much neutral here. All right, let's go on over to the economic reports of what's coming this week. Nothing on Monday. JOLTS is out on Tuesday. Petroleum report and FOMC on Wednesday. And we got our jobless claims again. PPI and consumer sentiment on Thursday as well. There is an OPEC meeting on Thursday. I suspect it might happen or is scheduled to happen before our markets open. So sometime overnight. And we have a CPI on Friday. Now this doesn't list Good Friday. So I'm expecting that Good Friday was last Friday and I missed it. Today's Palm Sunday, right? Do I use open close or net close? No, I didn't. Darren, I believe they are. I do not use net. And let me get over there on my TC2000 and I'll show you. Let's go to the earnings calendar real quick. Not a lot, a very, very light week. We'll pick up a little bit next week. But as you see here, I have posted the earnings calendar and everything up this week. I've relaxed my dollar figure. I've taken away the $5 limit now because a lot of stocks have come way down from maybe $20 to below $5. I would consider it pretty much like we were in 2008, 2009. stocks that got ridiculously low that are probably still worth trading. To me, it's trading volume and average true range. And we don't really have any big announcements this week. Delta is out there, but I would suspect most of the news is going to be negative. One of the things that's going to come out from these reports are going to be guidance. If they provide any guidance whatsoever or any semblance of guidance like they talk about going forward, it's going to put a damper on the expectations, I would suspect. I don't believe that there's probably anyone out there on almost 95 to 99% of the industries are going to be saying life is great, we're cooking all cylinders. All right, let's do a quick market overview. All right, this is Thinkorswim. I'm going to go start on the crude oil. Crude oil is down a bit here, but and my stochastics RSI is coming off the top. Potentially we could come back as low as 20. And if you look over here, the volume and price levels would say about 21. Midpoint would be somewhere around 23. If we pull back to 23 and on Thursday they announce some sort of agreement, we could get ourselves, let me go get the crayon, we could have a move up, pull back to an intermediate low, and move higher. So we could have the zigzag pattern for oil to go higher. Where would I expect it to go? I suspect that we're probably going to run into some sellers in this $30 area and also in 35. So 30 to 35, those are going to be two key areas. If we break 30, we're probably pretty quickly going up through or towards 35. So watch for this pullback, see how deep it is, monitor what oil does, and the report on Thursday. All right, now I'm going to go quickly on gold. My problem with gold is that it's bouncing all over the place. Let me go to time frame. 6 months. Oops. You can see how we got up to 1,700 and down to 1,400, say 1,450. Man, unless you're quick to the trigger intraday, this was a 2-day move from 1,450 to 1,700, back up to 1,700. This is stuff that I want to try to avoid. It's way too volatile for me. I could lose hundreds of dollars with one contract in there. So even go with GLD. And even if you did options. Options are going to be pricey, especially with the volatility. And we're moving, what, $5 a day? No thank you. I'll wait for it to settle down. I'm not gambling. All right, let's go to the S&P 500. I have all of the charts here marked up in my Thinkorswim on the futures for the S&P, the Dow, the NASDAQ, and the Russell. And I have levels of support and resistance, potential support. Russell looks like it's holding 2450 and wants to go higher. The next level to be really concerned about would be about 2635. I did not mark it, but I marked this 2750-ish area. So to be honest with you, we probably ought to be looking around this 2650-ish, 2635. And I'll do a duplicate here. And let's go ahead and mark this one here. Somewhere around 2700 to 2730. Somewhere in this ballpark. Let me get it out of the way here. I use round numbers, pretty much. I normally like to go in increments of 5 or so. And I'm aware of the volume at price levels over here. This 2450 was fairly significant for this time frame, 3-month period. The next highest volume level was way up here around 3,000. But you notice how we went down? We did a reversion to the mean bounce and then rolled over. We went down, we went up a little bit, only one day, and then started lower again. Back down, up one day, so it's 2 to 3 days down, one up. 2 to 3 down, one up. Couple down, we tried to kind of stabilize 2450. We didn't, and then we had a couple 3 days to the higher side. And now we're really in this trading range of 2450 to 2635. We will have made a higher high and now a higher low, but in my mind, because I don't have a bullish signal until I get over about 2635, I'm not thinking we're out of the woods for a long trade in the Russell till we're over 2635. And that's for, I caveat that to say that is for a long day trade. Let's go to the Dow. The Dow's also tried to make a bottom here, similar to what we've done here with the S&P. Now the S&P, because it has 500 stocks in it, it's done a better job of holding its support. And you can see it. It's a little more ragged here on the Dow, but it's there. And we are starting to curl up off the bottom with stochastics RSI. All right. NASDAQ. NASDAQ doesn't really have a bottom that jumps out at me here. It's an area here from about 73.70 to probably even 75, 74.90, something like that. But again, it's also curling up to the bottom. It wants to rally. Well, you'll have to decide. I don't think in my mind, we're not ready for swing trading yet. It's going to take a while. If we get above 78.50, we could get a push through to the next levels. I've already covered the Russell. The VIX has really come back quite a bit from the 85s to the 50s now. Man, if I had said that it's coming back and it's retracing and I saw it was still 45, even 3 months ago, that would have been, we were way, way, way under the historical average. The historical average is still only around 20. So we get these big spike ups and then it'll come back down. All right. Anybody looking at the U.S. 10-year? It's come down back under 6 again. All right. I think we're ready for some trade ideas. And I'm going to go right on back. I got these in alphabetical order. In only alphabetical order. Darren, why don't you wait until we get the open up the stocks and I'll look at it then. Yeah, I mean, oil and gold are very volatile even under normal times, and these are not normal times. So unless you have a high risk tolerance and a lot of money, I'd probably stay away. Now, the one thing that you could trade for oil is the QM. Now, the QM is a micro E-mini, and it allows you to trade much smaller size and much more fine-tuned price in your stop. ARNC did a huge down move here back on April Fool's Day. Looked like it stabilized and looked like it's trying to get a little bit of a bounce. This may take a day or so. It could just start up with the markets. I think a rally to $12 is possible, quite possible. It would be a counter trend trade, but there's nothing over here on a daily chart to stop it. Now let me go up here to a 30-minute chart. And now I've got the gray shaded areas. Those are after hours, but not showing after hours. You know, we get up here, get going over $8. $9 is probably in the cards. And if you notice, the next level of overlap over here is 10. And then the next level of any resistance is up here at 15. Well, let's go to an hourly chart. That was the hourly chart. 30-minute chart. Yeah, there's the overlaps. Let's go back to the 1 month daily. Let's make it 3 months. We're possibly not ready on a daily basis due to stochastics RSI. I don't know. But a rally up to $12 is quite possible. So there would be a counter trend rally, and you'd want to have a good, healthy stop. And because I would be trading against the overall trend, I would say you need to reduce your share size and your risk levels. Let's look at Crowd, CRWD. CrowdStrike took a nosedive in the middle of March, but then it's rallied on its earnings. Big time. Now, this is on here not to say that it's a trade for this coming week. What this is on the list here for is to show an example that just because the markets are going lower, not all stocks are on that same trajectory. You need to be aware that some stocks, especially when they report earnings or any one-off event for them, they could be on their own page. Like running up into earnings, after earnings it gapped up, gapped back down the following day, and then gapped up again as the market started to recover a bit. The stochastics RSI is telling me we could potentially go a bit higher. I could see a $5 move very easily here in CrowdStrike, especially if the markets start to go higher. This one could be a trade this week, especially from an options trade. But remember, not all of them are going to have good options, so be careful. Etsy. Etsy is forming the possibility of higher high, higher low. Let's look at that a little bit right here. Okay, screen draw. Blue. Came off the bottom. Nice big rally from about 30 to 31 up to about 42 and a half, $12. Then a pullback. Probably is at a little bit below the 50% level retracement. Yes. So I'd be careful that it's pulled back a little bit too far, and that's what shows with the vol stop. But a rally back up here, we could, especially if the markets get going, this could be your zigzag higher. Okay. FitB. FitB is trying to form a bottom here. Slightly higher high. Again, did a little bit too far of a retracement to be ideal. It did have a dividend here. Earnings were way back over. But we still have time for earnings. This could be doing a modified zigzag, maybe only up to 18. But from 14 to 18, that'd be a reasonable trade. We talked about LB. Hammer on Thursday, move up higher on Friday. Slightly higher highs. I'm sorry, a higher low, slightly higher low. Is it still in a downtrend? Yeah. Is it possible that it's tradable? Maybe. I put stuff on here that would not, and a normal market probably wouldn't make my list. Ring Central. For the mid-March time frame, we've been on nothing but rally mode. Did a pullback, maybe a day or two late for the entry here. Stochastics RSI looks like it wants to curl up. A move up to 250 or so is quite possible. We do have overhead resistance, but would that keep me out of the trade? Not necessarily. Short crude oil? Possibly. Especially what we had with the news here, but it may be too far gone. What we really need to do is go back and look, well, short crude oil, let's do UCO. And let's go to a 1 month. When it got back down to here around $1 or so, we could probably have seen a move to $3 pretty darn easily. Now, there was crude on the futures contract. Moved from 22 up to 30. That was telling you, with the stochastics pointing higher, that was a possible trade. Could short crude oil get a rebound here and come back up and not have any resistance overhead? Yes. But it would be a counter trend trade, because once April happened, we probably, in my mind, changed the trend. We did have a cross of the 8 below the 17. And definitely the 3 crossed the 8 a long ways back. Simon Property Group's trying to do a double bottom, potentially, with stochastics RSI. Let's go to a 3-month again. With stochastics RSI trying to tell us that the momentum is starting to pick up. Possibly. You need follow through. What would the targets be? 60 to 65, maybe even 62.50. Under Armour, again, possible double bottom. Stochastics are looking pretty good. Targets under 10. Not a lot of bucks in it. UNFI, nice move higher on earnings. Pull back. Probably about from 5 to 13 is 8. 4 and 5 would be 9. About a 50%-ish retracement. And if we could move higher, say above the $9.75 to $10 level, we could easily go back up here to 12. Let me take it to a 1 month. Let me take it to an hourly. Yeah, you can see here, we get over this 960, 975, and a move up to 10 to 10.5 is quite likely, actually. All right, let's go look at some shorts. I think FedEx looks like a short, except the momentum says that it's maybe a little late in the game. Probably more likely that the short time to short it was on Friday or even earlier. Once we lost this area here around 113 to 112, that was the area that it's dropped to. I would want a bounce. I'd want to bounce back up here to 112 and a half or so, and then roll over again. The only negative that I see in this chart as a short is that we may have already made this run, or most of it, but maybe not. Now, price is king. If we get a rally on Monday and start to go up, we would have to get above 117 for me to call off and say that it's no longer a short. I would love to see the rally, and I would really love to see the rally up, 116-ish or so, 116.50, even a rally to 114. That would be nice, and then a rollover. Hoo-yah. That is a nasty candle, folks, and that's on volume. That ain't mop and pop. That right there, gap up, followed by nothing but down. So we got 15. Pretty much nothing but downside after the rally, or the gap up, I mean. This is not good for anyone that's a bull. If it breaks, say 15.50 or so, I think it's a short down to at least around 14 to even the 13s. URI, URI also looks like a potential short. Now I'm going to bring up here short so I can do something real quick. say below about 84.50, I am going to do a quick draw McGraw, create a parallel line, and that it's pretty much in this channel, and it's dropped out of the bottom of the channel. But if it gets back in the channel, I'll forgive it. But the possibility, if it gets below 84.50, it's dropped out of the channel and that rally has failed. And if you look down here at the bottom, my stochastics RSI has already crossed over. All right. Well, up very strong. It is quite a long time to go there, Fred. All right. Let's go back over to the slides and see what we've got left going here. All right. For those who have not done it, you can sign up for 60 days of either right way options or hit and run candlesticks for just $49. Here on my slides, and then when I stop the presentation, it'll come back up and you can click on it, and you can either get a right way options with Doug Campbell, probably the best options trader that I have ever met. I really love his style. Very conservative, and a lot of people say, hey, wait a minute, options and conservative are two, that's an oxymoron. No, it doesn't have to be, because he uses price. Hit and run candlesticks. Mr. Rick is a darn good trader, finds good setups. You could find, I could find a lot worse people to follow and to learn from than Rick. And plus, we've got a bunch of good traders in the room that do a good job of sharing what they see, and more eyes on the market really help. If you want to follow me, I've got StockTwits, Top Gun Trading, or Top Gun Trading on YouTube.com. Later tonight, I will post the video here after it renders, and I can get it uploaded. So on those nights that I provide the commentary in the webinar, you can always find mine. Plus, you'll find a whole bunch of other things that I think you might find useful, especially stochastics RSI, or trading gaps, or trading earnings. All right, I want to open up for general questions that are not stock specific. I will ignore anything that has a stock specific, except if it's just an example about what your practical into risking your assets. Possibly not, Malcolm, but I felt there are some people that may be addicted to trading, and my amount of trading has gone way down. I am mostly day trading futures, the micro E-minis, because the regular E-minis are just too volatile and exceed my risk tolerance. So I have more contracts from the micro E-minis, maybe 4, 6, or 8 instead of 2 of the regulars. The possibility of making more money is reduced. I will grant you that. The possibility of losing more money is reduced, and you'll have to grant me that. I primarily trade futures intraday, although I do trade the options. Like I said, I swung trade. What did I swing trade this last week or the week before? Just got to remember. Hold on 1 second. I don't have anything now that I held overnight. Nothing. And I know I only intraday trade the futures. I do not hold them overnight. I trade with Ninja Broker and they have a couple of clearing houses that they use. I use Phillip Capital. I'm fine with that. The moving averages that I have here primarily are the 8 and the 17, and then I've obviously got the 200 and the 50, and this dashed magenta line here is the 100. And I put on the volume profile, and if you don't know how to do the volume profile and Thinkorswim, you go in and they call it volume profile. I call it volume at price. You have to deselect, in my mind, deselect on expansion from yes to no, because if you say no, it puts all the volume levels off far to the right, not overlapping with price. It's easier to see what the levels are if they overlap. But when you do that, you have to lower the opacity, and I put it at 20. All right, so 17 exponential, 8 exponential, those are the main moving averages, especially with the volatility we've got. How do I set up time tabs on TOS? On Thinkorswim, been so long since I did it, I'm going to have to remember. Can you, John, if you can stick around till after the presentation, I'll be glad to stick around for you on that one, because I'm probably going to have to hunt and peck a little bit. Okay, thanks, John. Lauren asked, what signals would I look for to give me more confidence in swing trade again? Higher highs, higher lows. And in the markets, primarily. If we can, it all depends. Now, Lauren, I contend that people can swing trade the 30 and 60 minute charts. Let's go Ring Central. Potentially one could swing trade a 15-minute chart, but I don't really think so. But if I could get something over, say, 230, there are going to be individual stocks that I could swing trade. Oh, I remember what it was I traded now. VIPS, an ADR. And I got in over here on the curl back up, and I was looking for it to get back into the channel, and it did, because I went long here towards the end of March. And when it gapped up and ran up higher to the $16 level, I saw that it started to roll over. Well, sorry, I took my first off the table at the gap up on, what day was that? The 31st. And then when it moved up to this high on the 1st, I started watching it because it's pretty close to where this other high was over on the 24th. And once it started to roll over, I said, you know what? Markets are starting to look a little weak here. I took my profits with the two contracts and put probably $250, $275 in the bank. My targets was originally to be for it to go to $17.15, but I wasn't going to be stubborn. Did I let it go all the way to the vol stop before I got stopped out? No. That would have been, to me, a bit foolish in the market, so we could get one-day swings that are ridiculous. So I'm gonna take my profits quicker, and if I'm not in the trade and it goes higher, so be it. I'm not going to be in that trade when it goes lower. Again, what was rule number one? Rule number one. Preservation of capital. Live to trade another day. I had $275. It was time for me to exit because there are a couple of them. Well, I think that week I had $100 loss on maybe the futures trade, or two losses that totaled up to 100, and that evened me out. And I know that's psychological, but hey, it's the way it is. We're psychological beasts. Okay. Reggie, I would not listen to anything that goes on at the coronavirus briefings myself. They're using it as a stump speech for politics since they're not out on the road. Rule 0.5, don't watch the news. That could be close to rule number 1. Okay, I am going to open up for your individual stocks, one and one only. Tell me whether you're looking for long or short, or you're already long or short, please. Yep. Lauren, you're absolutely right. I'd rather be on the sideline wishing I was in, like the business about taking the profits on VIPs when it started to roll over. I could say, darn, I wish I was still in. Or I could be, oops. When I'm in VIPs, I said, man, I sure wish I was out. I'm trying to remember what, there was another trade that I did where it went up higher and I was on the sidelines. But I made a couple $100 on the trade. Basically overnight. It was something like 20 or 25 cents minutes in the market from the close. I bought near the close and sold near the open. It went higher. Oh well. I took my money and ran. Didn't look back. Okay, let me see if I can catch up to you guys. Now, Amazon. Let's see if I can do this. I'm going to stay on. Now, if Amazon's the sole supplier of all of us during the pandemic, why isn't it doing better? Well, I can see really right here without marking it up, this was in a channel until the last couple of days. And then it's basically pulled off. And I'm only going to draw the bottom part of the channel. And I'm going to take, whoops, no. I'm going to take poetic license and draw that as the channel line. That this was a one-day excursion outside the zone. And I'm lining up the bottoms. If I want to do a parallel channel, it would be up here, but I'm just putting the trend line. We broke through the bottom of that trend line, but we did not break through the volume at price level. The maximum volume at price is around just under 1900. If it breaks below 1875 or so, I'm not interested in it at all. For me to be interested in a long, and I'll assume you're looking long, Darren, it's probably above 1930-ish to get back towards the towards this line. Now, one thing we need to, if you do go long and it comes up towards one, this 1965 level, or two, gets up here to this trend line, watch out for people who are going to watch the trend line and are going to sell when it gets to the bottom of the trend line. All right, Dahl wants to look at micro squish long. Assume you're not in yet. Again, micro squish. Basically fell out of, a lot of these FANG stocks kind of dropped out of their upward trend the last 3 days of last week. This one's held pretty close. To me, I don't know. You got 160 here, but then we've got all of this overhead resistance, 166, 170. It could be a crapshoot. My stochastics RSI over here is telling me that the momentum still has not picked up back to the upside. It kind of gave up the ghost right here on this day of 31st. I'd be patient. It's kind of meh or iffy, and if it's meh or iffy, go on to the next one. It's my motto right now. Okay. Darren was looking short. Okay. Yeah, I heard you that if it goes below the level I discussed, Darren, again, Cerner dropped out of its line. I think this is just doing a pullback because all of these stocks that we were looking at, be careful, even with Amazon, they're going sideways. They're not pulling back. They're going sideways, which is usually, with momentum coming lower, that's usually a sign that momentum is and steam is gathering to go back to the upside. How far, we don't know. Cerner's doing the same thing. It's not there yet, but maybe 62.50, maybe 62.75 for a run to $65, and then that would be target number one, and then target number two could be all the way up here to about 67.50. Let's go back here. Let's take a look at the 30-minute. Yeah, see the 30-minute's got a lot of volume right here around 62.5. Then we could gotta move here to 64-ish. Let's go look at an hourly chart. Same. So you could take a flyer on it if it starts to move higher on Monday. Just be careful that you have targets in mind, and when you get money in the bank, when you hit a target, it could be as low as 64.25. Put some of the money in the bank. That way, if it does roll over, you've got a long ways to roll. You're probably going to have a profitable trade. GP's going long. JB Hunt. I had an offer to go to work for JB Hunt. Coming out of college, they were going to pay for my master's degree, and I told them nope, I wanted to stay and go into the Air Force. All right, this is going sideways. We do have earnings after the market on the 14th. It's a little ways away. Do we think we're going to get a rally into there or not? Well, the charts are going to tell us. If it gets up above 95, this thing could just be in a range bound from anywhere from 85 up to 95 until we get through earnings, and then it'll tell us. These are tough times to be trading ahead of earnings, and I would definitely recommend not holding over earnings unless you have some burning desire to gamble, or if you do have maybe some sort of spread trade on options that define your risk. But they're going to get darn expensive. MPC. Was that Marathon? Marathon probably has not seen its lows here. Could we go back down to the 16s? 15s? Possible. Don't be in a hurry. If it gets over 25 something, it looks pretty darn good for a while. But let's face it. These things are going to have extremely high average true range. It moves $3.50, basically $3.48 per day. 17.33% average true range in one day. That is not for the faint of heart. I personally have looked at it, but went the other way primarily because the pattern wasn't compelling enough, and the ATR was too much for me. Mervick wants Brigham Young. Bristol Myers. Okay, let's look at it on this one. BMY. Okay, we're looking at 9 o'clock. I'm going to cut off no more symbols, please. All right. Yeah, this one looks like it's rallied. It rallied up, if you look over here to the left, at about this $56 level. And it's just kind of hugging that 56 while it's gathering momentum, probably up for the next upside. So of all the stocks that we've talked about today, I probably like this one the best, but it's going to have to get over 56 to prove its mettle. Yeah, it looks okay. What does it look like intraday? Just It's consolidating. And that's where we hit 56, right about in there. So yeah, 56-ish is probably the right number. Let me find it again. Oh, I've lost it. Apache. John wants to go APA long. These are hard because these have dropped so rapidly. I'm going to zoom in some more. Just kind of did a double bottom. I'm going to have to see higher highs and higher lows before I give you a thumbs up there, John. I'm probably going to want above 7. If you get above 7, we could, stair step our way up into the 12s. As long as oil prices remain low, this one's going to struggle, I believe. Now and it did go up. This is probably some opportune buying and some short covering back here. Probably got a whole bunch of people shorting as it went down lower there, and people closing out their trades now. But you can see here why I was talking about $6.50 to $7. Then maybe a move up to about 8.5 or so. Cisco long for KLH. Cisco. The Cisco kids trying to consolidate here. Momentum's basically building cause for the next move. Probably got to get over the $40 level. You're going to have some sellers probably show it up at 41.25 to 41.50, and then stair step your way higher. It's okay. It's not great. It's not bad. Probably in the number 2 stock that I've seen tonight. Valero. See a lot of people thinking about energy stocks. This is definitely not a long. In fact, it might be a short below 40 to go back down to 35. A move quick, but it could gap lower and then pull back up. So if whatever it does here and on Monday, if that sets the low, we've done a higher low. We'll have one higher high, an equal high to this, not a higher high. It's not quite an equal, but it's close. And this is an equal low, but if it goes down below about 40, it will have done a lower low. Now let me do something real quick here. All right. With Valero, if it comes back down into here, it will flip over. The volatility stop will flip to the downside. And my good friend Doug says he does not trade any that in a long that are below the volatility stop. For in this case, he would have been able to maybe just hang on for a long, especially if it had done a bullish candle on Friday, it'd be looking okay. But the fact that we've got oil probably gapping lower tomorrow by as much as 8 to 10%, this could follow, and it'll probably disqualify itself from being a higher high, it'll be a lower low now. So what you will have is basically expanding. Let's just say that it goes down to this level. And that was my cone there. And now I'll have an expanding wedge. Expanding wedges are not what I want to be trading. Those funnels are basically Chop City. And somebody wants to look at LMT. I'm sorry I'm being Mr. Negative Ned, but we're probably going to be like this for a while. It's going to be in between. Now, Lockmart's looking not so bad. Maybe a bit late. And that's the rally. That's the pullback to the lower low. And we're going to have to rally up to maybe 380 or so. But 360 level is going to be key there. Stochastics, we went higher with stochastics basically building momentum. This level up here. Notice how what we did here on the 27th, were the highest volume in the last few days there. We did a spike up, and when we closed around 350-ish, once we went down to the 320 or so, it told me that 350 at some point in time is going to get retested. High volume spikes do like to get retested. More if they close in the high end of the range of the day. This would have somewhat of a shooting star kind of look to it, which was not as good. CATS for a long bill? Is that really the right symbol? Catasis. Don't even know what the hell they do. Medical care. It would have been nice to go long at 12.25 or so, or even 13.30. Right now, 3-day chart, 5-day chart, it's run back up. Let's put it this way: the easy money's been made. This area's a lot of congestion. And can it go up to the $18 to $19 level? Sure. Do I know that it's going to do that? No, I don't. And where would your stop be? The vol stops all the way down here at $13.75 from, that's $2.50 lower. You don't have $2.50 to the upside, or just $2.50 to the upside. That's the upside. That's the downside. They're about equal. I don't like that. Maybe getting in long down in here, but it gapped up. That's what these markets are doing to us. NVIDIA. All right, I looked at NVIDIA earlier today, and you're looking long. I'm saying it's probably more a short than it's a long. Breaking below about 240, except for the fact that we've got stochastics RSIs going down, but we could go down more and we could continue to bounce off the bottom. This looks like it's trying to change character unless it can get back above 257 to 260. If it goes 257 to 260, That's kind of what you're looking at. ABC up. But you got to get over the 255 to 260 level. Right now, they're a long ways from it. And my stochastics are pointing lower, and we have a Oreo sandwich on Wednesday, Thursday, Friday. Meaning Oreo sandwich is white filling, 2 black cookies on either side. That is a negative pattern. That is usually a sign for a continuation to the downside. Not a bullish candle at all. TER long for Mr. Rickster. Teradyne. Teradyne looks like it has probably established a higher low. And now looks like it might want to try to do the third leg up. Where would it go to? Probably the first level is 57.50. Then this 60-ish level area right in here, although it doesn't have a lot of volume. Not bad, Rick. Good check. Teladoc on a 2-day versus a 1-day chart. Okay, JC, we'll do that. Okay, style. Frame. Shoot. Now I've got to go back to time frame. Two-day doesn't help me at all. Let me do this. That's a daily chart. Shoot. Now, I line up the white bars to the top and the black bars, candles, to the bottom. You're in the middle of a wedge. It will tell us which way it's going to break out, up or down, pretty soon. It's getting closer and closer to that apex of the wedge. And be careful, it's going to come out. However, if one were to take a more traditional view of the world, it's basically a symmetrical triangle, where this is kind of a slightly rising triangle. Splitting hairs. Balance of power is a little on the negative side. Probably all the buyers are here, and people, the traders are probably taking profits. And Teladoc, let's go. I am going to go back to the daily because I want to see. Volume price around 160 or even as low as 130. But we're still in an uptrend, but the 8 is starting to flatten out. Notice how the momentum has been down near the 30 to 40 level. It didn't sell off nearly enough to get enough momentum to go back higher. So it's just waiting. I don't know on what, but it's waiting. Trucking rates are higher. Okay, I don't follow the fundamentals like that. All right, John, thanks. Purdue, thank you. All right, good job on Mr. Bill. Walt wants to look at SMH. Shake my head. You didn't say which way, though, Walt. If it can stabilize above 110 and then break above 115, it could be a possible long. But if it breaks below the 110 to 109, it's a short to possibly 100. We're in this no man's land again. Gwen wants to look at J. Is there a J here? J Long? No. Oh, Jacobs Engineering. Ha. Okay. I've heard of them, but I've not traded them before. Yeah, over 81, but watch out for the stochastics RSI. If price breaks 75, definitely you're gone. If you break above 81.50, it'll prove that it wants to go higher. It's done a little bit of a pullback. Yeah, it's just consolidating here with the lows down around 75 and the high around 82.50. Make it break one way or the other. Yep. I saw you there, Amazon. I covered both sides of the trade. We break below 1885. We probably 1850 or so. And for it to go long, I would want it to be above 1935 to 1950. Again, remember I talked about maybe a curl up to retest either this level here around 1965 or the trend line. The only thing that's encouraging to me right now is that the stochastics RSI looks like it's building cause to go back up. Brian, next to last one, you want to look at Super News? Oh, New Skin. Yeah, this isn't half bad. Stochastics RSI look good. Price candle looks good. Especially, yeah, anything higher than Friday, but we got to worry about 22.50 and probably a move to 25. Not bad. I like that. Howard wants to look at ASML. Well, ASML, let's look at this. Oh. All right. When did the rally up? Crikey. Yeah, let me get rid of that. Sorry. All right, did I rally up? Then we had a 1 day move down, another 1 day move up, and people that were long were going, hey, great, it's set a bottom. Well, 1 day does not a trend make, and it needs to continue to go higher, and it did not, and it rolled over. The perfect place to go short is around 260. Well, we're almost $20 lower than that now. Could we go down into the 235 to 240 and fill it up? Yep. Stochastics RSI tells me that we may not go that low. We may try to just bottom here with earnings coming up. 4:15 unspecified time. It's 10 days away from here. A week and a half, because plenty of time to do its thing. But we're not in an ideal situation, and even if it starts to rally here, we're still in a downtrend. See where we're looking at the EMA only chart on ASML? We just did a rally back up to, reversion to the mean here, and it's rolled back over. So in my case, no. One thing I forgot to look at here, and I do apologize. I dropped it totally off of my radar scope for the last month. This is our move down from mid-February to mid-March. And you notice how we basically bouncing off the zero line. Well, the possibility is that we're bouncing off a quite a bit higher low. Not super fantastic, but a higher low. This is my bounce zone that goes back a decade. So anytime we get down in this level, we're oversold enough that bargain hunters will come in. Somewhere in the neighborhood of 10%, 8.25% of the S&P 500. The number of highs, 4-week highs versus the 4-week lows outnumber each other by about 9 to 1, a little over. So we have plenty of room to rally. But doesn't mean we have to rally. And you see what happens, these numbers go up and then they spike right back down in one day. They don't have to go up. Nothing about this bounce zone tells me exactly when, although it probably does once it starts moving higher, but it won't tell me the order of magnitude or how long it's going to last. So we're probably overdue another bounce, but I don't know how big or the bounce is going to be or how long it's going to last. All right, folks, I need to stop this so that I can render it and post it. Sorry for those that missed the, I missed IBB. Okay, I'll cover IBB for you. IBB is kind of in no man's land here, kind of going sideways. Anything, over about 110, it'll be a long. Excuse me, got the hiccups. And other than that, we're in this wide trading zone. It's trying to consolidate here. And that's what a lot of them are going to do. When I said be patient, it's going to take a while for the sloshing of water to subside. Well, these were the two splashes where the elephants jumped in the pool. And now we're dealing with consolidation there, move up, consolidation here, maybe a move up, consolidation, maybe move lower, consolidation. We're going to get areas and pockets of consolidation for a while. Now, I was not actively trading during the housing bubble debacle, 2007, 2008, 2009. But from looking back at it, they had the same kind of problems. It was not a direct V bottom. But once we hit the bottom, looking at it back in retrospect, 666 on the S&P 500 SPX was the bottom. The devil, huh? All right. Thank you very much, folks. Thank you for showing up again. And I think, John, have you gone out there and looked at the YouTube My Tools setup and see if it has the explanation, because a picture's worth a million words? Okay, fantastic. And if you're in the room and you need any help, or if you're not in the room and you need help, email me. Better to do Top Gun Trading 2 at gmail.com. And go ahead and put down, put coaching, because I have it set up for coaching to flag it for me. And then I'll answer your question. All right, folks. Be smart. Be safe. Aloha.